Hey guys, today I wanted to compare QYLD versus PBP, being a lesser known covered call, or another term for it is a buy write ETF, or they're also known as income funds, to be able to write and sell covered calls and give back to you the premiums received back to you in a distribution or a dividend yield. I'd like to go through each of the fund's website pages and look at Seeking Alpha's data and try to pull out some of these numbers. These are the current 12-month trailing yields for these two funds. And then we also have an expense ratio very similar, with PBP being about a 0.11% less. The difference between QYLD and PBP is QYLD pays a monthly dividend, which is a little bit more desirable for those that want to own these funds for purely income. And then also PBP pays a quarterly dividend, which is not as favorable. We'll start with a $0 monthly edition, and we'll go ahead and go over to Seeking Alpha and check out the CAGR numbers for these funds. And PBP has actually been in existence longer than QYLD. PBP has been around for about 14 years, and QYLD has been around for about 8. So we'll go ahead and get a better accurate figure for these numbers, but we will leave them blank for now. And we'll start with an initial deposit of $350,000 for those that have a larger portfolio and looking to see if they can retire or produce a large amount of livable income off of these funds. And then by the end of the video, we will also look at what a smaller portfolio of about $10,000 would look like in both of these funds. Over on the QYLD, or Global X's QYLD page, just a few reasons to consider QYLD. Some of you may have seen this before, some of you may have not. What I'd like to highlight here is QYLD writes call options on the NASDAQ 100 index, saving investors the time and potential expense of doing so individually, and they charge you a 0.6% expense ratio to do that. The fund inception date was December 2013, and their 12-month trailing yield they claim is 13.88%. Over on PBP's website, PBP is owned by Invesco. Invesco also owns the popular QQQ. Invesco, or PBP, is Invesco's S&P 500 buy write ETF. I might do another comparison video with PBP versus XYLD. XYLD being Global X's S&P 500 covered call ETF, to see how the two buy write or covered call ETFs compare against each other. But I wanted to do QYLD first, as QYLD is the more popular of the two different investments from Global X. I would like to point out here that PBP does do something very similar, where they write or sell call options on the underlying assets. However, instead of a 100% covered call as QYLD performs, they only do a covered call on 90% of its total assets and securities that comprise the index. So that is something to look out for. However, I did want to compare these two funds, as this fund right here does or is based on the buy write index, or the CBOE S&P 500 buy write index, whereas QYLD follows the CBOE NASDAQ 100 buy write index. Over on Seeking Alpha, what I would like to do here is find a CAGR number, overall CAGR number for QYLD. And to be able to do this, we'll click Advanced, go over to All, and see what a roundabout starting price was for QYLD. And you can see over the entire history of QYLD, the fund has depreciated in value. So if you invested $10,000 at the start, you would have lost a significant amount of your return, and your dividends would have been decreasing over the entire course of the fund. However, if you look at scenarios such as if you started at the bottom in April 2016, you have increased your fund value and you would have gotten the dividends. And if you knew that this fund was going to drop in 2018, you could have gotten out, as well as at the bottom at 2018, a very similar run to about January of 2020, and then the fund dropped again. And then if you invested in the bottom right here, all the way to the top, you can see you would have had an appreciating asset. So as you can see right here, we've hit another drop. So if you want to take a chance on QYLD, now might be the time to get into QYLD and see if it can rise from about $20 up to about $23, or even maybe back to these other higher figures here, but it's up to you. For the purposes of this video, we're going to take an overall 8-year CAGR number, or 8 years and a quarter, so 8.25 years, from about $25 all the way to 2064. Before we head back over to the spreadsheet, I also wanted to do something very similar for PBP. Over on PBP's page, they had a starting value of about the same, about $25, and you can see the fund inception date for PBP was December 2007 with a starting value of about $25, and you can see due to the 2008 crisis or market crash, we had a depreciating asset, but overall over the entire course of the fund, it has remained relatively flat. If you take these years from about 2010 to about the beginning of 2020, then it dropped again, and then it appreciated again as well. But for the sake of this video, we're going to start at $25 and go all the way to today's figure to get an overall snapshot. But if you feel that PBP is going to continue to rise in value, now might be the time to invest, very similar to QYLD. Coming over to the spreadsheet, what we did there, that exercise on Seeking Alpha, was trying to find these numbers. And on my calculator here, the CAGR calculation, we have these numbers already put in. QYLD is sitting at around $25 at the starting value, and same with PBP. QYLD's fund inception date was about 8 years and a quarter ago, and PBP was about 14 years and a quarter, giving us a cumulative overall growth rate, or negative growth rate, of negative 2.3 for QYLD and negative 0.6 for PBP. So with that in consideration, let's go ahead and go over to what the history of these two funds look like before we dive into what the future value of these funds are going to look like. Let's go over to one of my favorite websites, Portfolio Visualizer, and just see how these funds have performed in the past since the inception date of QYLD around 2013, and see how these funds performed. We're going to first look at how these funds performed while reinvesting dividends, then we'll come back up and see how they performed without reinvesting dividends. So if we click Analyze a 100% portfolio of QYLD and a 100% portfolio of PBP, we come down to the historical graph here, and starting in December of 2013 with a $10,000 initial investment, we can see in the blue QYLD with dividends reinvested would have outperformed PBP in about 8 years. The overall CAGR with dividends reinvested is 7.6% for QYLD and 5.65% for PBP. And we'll see how these funds would have fared if all you wanted to do was take your $10,000 and pull your dividends out and have it to be able to pay your bills, your credit card bill, your mortgage bill, your car payment, whatever it might be. Analyze the portfolio, and we can see that Invesco PBP would have outperformed QYLD. PBP would have increased to about $10,757, which is not very much. According to this graph, if you would have invested in about 2013 in PBP, if you do recall, PBP's history is a little bit longer than 2013. However, this graph will only go to the most recent fund's inception date. That's why there might be a little bit of a different CAGR number as we see or calculated for our future value of our funds. Over here, without dividends reinvested, QYLD would have seen a negative 2.88%, which is very close to the figure that we calculated from the Seeking Alpha numbers. PBP would have had a 0.9% growth without dividends reinvested if you invested $10,000 at around 2013. Coming down to the portfolio income graph, with $10,000 invested at the end of 2013, QYLD in the year of 2014 would have paid you $1,000, and PBP would have paid you about $500. With the same amount of money with no additional investment, QYLD would have paid you $863 in 2015 and $418 $13 for PBP. Over in 2017, PBP would have paid you $1,100 and QYLD would have paid you $739. And in the most recent full year that we've seen, QYLD, with your initial $10,000 investment back here in 2013, QYLD would have paid you $1,100 or close to about $90 to $100 a month, and PBP would have paid you close to $700. Coming back over to the future value graph or fund versus fund calculator. If you recall, QYLD actually did update their website for their 12-month trailing yield to be 13.88. And PBP, their 12-month trailing yield, it was stated to be about 6.25%. Now, PBP's dividend yield has been very erratic over the past few years, but I did want to show this to you guys and pull the most recent 12-month trailing data. So with those CAGR numbers that we calculated from Seeking Alpha with a $350,000 investment, we can see both funds. We know that both funds over their entire history have depreciated. With these numbers, if the funds continue to depreciate the way that they have been going in the past, that continues in the future, and if you don't time it correctly, you're going to see a depreciation in your fund value if the funds performed as they have done in the past, with PBP not performing as poorly as QYLD. If you come over to the income side of the graph, you can see with your $350,000 investment, QYLD will in your first year have paid you more than double in dividends. However, with no new investment and you just take your $350,000 and let it ride for 10 years, your $261,000 in QYLD will produce $37,000 for you in income, where your PBP fund with $313,000 in it after 10 years will be producing you $20,000 after 10 years. So a little bit better consistency with PBP. Let's see if you had a $10,000 investment in QYLD versus PBP. QYLD and PBP again have a depreciating value as they have had in the past, with QYLD depreciating more over the course of 10 years. And this is the type of income you would expect to receive from QYLD versus PBP, which is very much in line with the information from Portfolio Visualizer. Head down into the comments and let me know what you guys thought of this analysis and what you would like to see next. One of my next videos, I would like to take QYLD versus PBP to see a better snapshot of two S&P 500 buy, write, or covered call ETFs compared side by side. And with that, thanks for watching.